I'm Jeff Gruler, and CEO and Chief Loan Originator here at C Trust Financial in Florida. So coming to you from all the way from Longwood. It's a suburb of the area of Orlando, so we're just a little bit, maybe about 20 minutes away from Disney World. So anyway, coming to you from the amusement capital of the world, welcome to our channel. What we're trying to do today is I'm trying to put a myth to the title of this video, and nothing's going to be perfect. So please don't judge me on, if I say a couple times or whatever. It's not easy getting in front of the camera. But I do welcome you today, and I do thank you for your time. What we're going to do here is a short little segment on why you should refinance today. We are sitting in America in the largest, I think last week I was reading an article, I think it's something like $34 trillion in equity sitting in people's homes. And I'm not trying to get it. I'm not trying to get you to spend money that you don't have or anything else. But I get tired of the media that doesn't have any idea how to do the math and understand why you should refinance. And that's why I'm doing this video of why you should refinance either in a high rate environment or a low environment. I am going to put out a few legal disclosures. This is not, in violation of TRID or something else or someone trying to trip me up. All I'm trying to do is I'm not quoting anybody any specific thing or what they qualify for. And this is what's sad about our society is with such a litigious society. There's always somebody out there who wants to trip somebody up on some video. That's why a lot of people don't want to even do them. I'm going to put it out there because in the spirit of just giving you just generalized information, I'm going to use most of the time a 30-year fixed mortgage at around 6%. Not saying that's what people qualify for, putting a disclaimer out there. We're not putting any APR out there because I understand that's like we're not involved in a deal here. I'm just trying to use this as an explanation and an understanding of what people should be doing or not doing when they're out there looking at refinancing their homes. And this is specifically to people that own homes, have some equity in the house, and I'm going to show you the couple of different options of why you should or why you shouldn't. And there's a couple of opportunities. But listening to the media that doesn't know anything about real estate finance, a lot of times I just get extremely frustrated, and that's why I'm putting out the video, is to sit here and let you know that we do understand finance. That's what we do for a living. And welcome your opportunity. Our phone number is right here on the screen, and you can take a look at that and give me a call if you have any questions about or any concerns. I'll be happy to answer and address those. So look, come on, just come join me a little bit, on this little bit of a journey. We're just going to do some math that was out there in third grade. It's not heavy-duty math. It's not going to be anything about any algebra, geometry, pre-calculus, or anything else. Just stick with me on the numbers because the numbers speak for themselves. I always say the numbers don't lie. The numbers are what they are. And that's why I'm good at this business, because that's what I do. That's my specialty, is understanding numbers. And it is that kind of business. It's about numbers. So come on, join me. I'm going to go to the whiteboard, going to turn this camera around and just kind of stick with me a little bit there. Let's not focus in on the colors of my tie or anything else. Let's stay focused in on just this particular thing. Again, I thank you for your time and joining us today, and I hope you get something out of it. Thank you. Okay, let's not run away from the math. Okay, I'm going to roll up my sleeves if you don't mind. You'll see the back of my head a little bit. Yes, I'm bald. I'm 59 years old. If anybody's wondering, it's like, geez, I wonder how old this guy is. Okay, so I'm 59 years old, or 58, going to turn 59 here soon. And let me get my, I forgot to get the whiteboard thing here, so let me get my pen. Anyway, the subject that we're talking about here is why you should refinance. All right, I rolled up my sleeves. We're ready to go. So again, I appreciate your time. I'm going to show you a few things here on the whiteboard that I do when I training. Coming to you from our boardroom inside here in our conference area. So if anybody's wondering where I'm at, I'm not in some stage studio or anything else, just here sitting at our offices, and I'm going to show you a couple of things. Again, why should somebody refinance? Let's just take a look. Again, we are sitting, I'm just going to restate this again. We're sitting on trillions of dollars in equity, but I'm going to turn this down into you, just an individual possible homeowner that's taking a look at this, that I hear and I talk to people every single day that tell me, no thanks, I got a rate at 2.75 and blah, blah, blah. So why are you online looking for anything? You're here because you're looking for one of a couple of things with your home. You're either trying to make money or you're trying to save money. It's as simple as that. And how can you do that? I'll show you here of what you should do and what you shouldn't do. So let's just, and my drawings and my handwriting isn't that great, but let's just take a look at your current situation, okay? So I'm going to write your current situation up here, okay? And we're going to talk about the new situation, okay? So we're talking about, let's just put this up here, simple house. Again, my handwriting's not bad, great, but 3-bedroom, 2-bath, 2-car garage house, okay? Just a simple house. You probably paid somewhere probably around $200,000 or less, for the house. And what's it worth now? Okay. Right now, if you bought this home, 10 years ago or before, anywhere else in the country, even here in Florida, these $200,000 homes are what? Now they're probably what? 600,000. So you got $600,000 that this is what it's worth, right? And this home is now you got what? $400,000 in equity. Okay. And what I'm trying to explain to you, this is your current situation. So we'll move that here. I should have probably put it over here. I'm just putting it out here in the middle. Okay. I'll make sure that I kind of keep on this side. You got $400,000 in equity. And every time I talk to somebody on the phone, like this past week, several of them, well, I got all this equity in the house or whatever, and it's like, I don't want to touch it. Okay, it doesn't matter whether, let's just say that you have $200,000 over here, and let's just say the house is worth $600,000, okay? And you owe, I'm just going to round up some numbers, and let's just say you had about $100,000 that you owe still. And this was sitting, you got that interest rate, like some of my friends, sitting on 2.5% or whatever. Let me just talk about interest rates in general, okay? The reason why you got a 2.5% interest rate is because the Fed's fund rate was sitting at 0.25% to be exact. What's the Fed funds rate now? That'll be your homework. If you want to go and you take a look and you tell me what it is. If you're getting 4.5% or 5% on your passbook savings or a CD, you had $100,000 and you put it out there, what are you getting on that now? So I get all these people that are sitting around that's like, this is why no one's going to get you this rate today. There's a reason. They can't give it to you at 5. Who's got the biggest buildings in town? The banks and the insurance company. I'm not a bank, just a mortgage broker. But the thing is that when you're sitting here with the banks, this is why, because they've been giving those two entities are really been giving it to all of us for the last 100 years, right? You got to keep paying the banks and the insurance companies. So what you got to do is you got to learn about smart money. And that's what I rolled up my sleeves right now. And we're going to talk about smart money. And what's smart money? If you have your first mortgage and you owe 2.5, I'm not going to sit here and tell you that if the current interest rates, and again, we're just looking at some, it's like 6 to 7, something like that. But at 6%, remember, this is just an informative video. This isn't for anybody or what you can qualify or anything else. If someone called me up, we're an equal housing opportunity lender. I'm approved with VA and FHA, and we do these loans or whatever. But I'm just saying, I'm just using this as a simple, easy math so nobody has to get confused, okay? I'm one of the only guys that still has one of these, an HP12C. Why do I have that? Well, there's reasons why. But anyway, all I'm trying to sit here and tell you is that if you owe $100,000 on your house or whatever, now we're going to go into the scenarios that this person typically is making their house payment here on this thing. And let's just say this was costing somebody $1,000 a month. The difference between these but here's what happens to people. They go out and they buy a car, okay? Or they possibly go out there and they buy a boat. Or they go out and buy an RV, okay? Or what's worse is they have credit card debt, okay? We already know multitudes of reasons. We are sitting in America with the largest over $1.5 trillion in credit card debt. It's rising every single month. And let me just tell you what these things are costing people. Your car payments, that little disclaimer that keeps rolling down at the bottom of the screen really fast or whatever, and you need binoculars for you to even see these things, is running you somewhere between 22 and 72%, 1,000. What does that mean? I can calculate the payments, but that's what that's running a month. Your boat payments, some of this stuff is running anywhere from $22 to $28 1,000 for every $1,000 that you borrow. I'm going to explain this stuff in a minute, so don't worry if I've gone a little too fast for you. But the credit cards is what I'm really kind of focusing in on over here, because this is where most people are at. I'll say the average person, I've been involved in seeing enough applications. The average person today is stroking over $17,000 in credit card debt. They won't tell your friends. You won't tell your friends what's going on. But I got people that worked at the bank or whatever, and it's like, they know. What you got on credit cards. And I see it with the applications that we see whenever we take an application and see what people owe. So I'm just giving you an average. You owe less than that, you owe none of it, good for you. You have nothing but equity sitting here, you owe nothing, you own it free and clear, you got all, that's the person I'm going to sit here and say, you probably shouldn't refinance, other than, what do you want to do with that house? And that's when we'll talk about maybe the possible new scenario of what you should have done. Smart money. What if you had owned? I came to Orlando 20 years ago and took a look at this area. And I could have bought a brand new house down by Kissimmee, which is down south of where Disney World is. And those houses out there, 4-bedroom, 2-bath, 2-car garage house, that seemed just really nice home, was $175,000. It was $175K back in 2004. That same house now is $600K. Remember this, people. Just remember that. Where do you think they're going to go? The media will tell you that $600K is going down. If anything, it's been going up. Why? Because we have a population surge. A lot of people are coming, especially here in Florida, from the other states. The three hottest areas in the country, in order, is Tennessee, Nashville, Tennessee. I used to live up in that area, so I know what that's like. A lot of people from California coming out there. The most expensive stuff in California, they're dumping those equities and coming out here. Why is that? Because to them, a $600K house, when their house, I was just doing some research the other night, down where I used to live, the average home that I could have bought down there was $200,000 20 years ago. Now that same house is $1.2 million. These numbers are ridiculous, people. I get it. I didn't create the numbers. I didn't make them up. I didn't make any of these things. What you're hearing here is a lot of passion and truly trying to understand what you're doing with your house. The game has changed, people. And you got to change with it. Because what's sad is it's so expensive to live, and people are doing all this kind of stuff. And the reason why your credit card bills are going up is because people, and they don't want to tap this equity on this house. I understand. They're hoping like, oh my God, this is my house. I want to retire here. I'm going to tell you a secret. The average loan, the average 30-year fixed mortgage, these aren't my statistics. It hasn't really changed much in the last 20, 30 years, is about 7.2 years. So everybody wants to pay a premium and get a 30-year fixed. But divorce, job relocation, unfortunately, like me, I lost both my parents. Sometimes people, they have somebody perish in their family. It changes up the dynamics of the family. All kinds of reasons why. People got to move, want to sell. People want to invest in something else, want bigger, smaller, the downsizing, upsizing. All kinds of reasons. But that loan that everybody wants, this 30-year fixed mortgage, typically only lasts 7.2 years. And I've seen it just over my course of my career and time frame, right about right. People are always in need of something. But this is the worst thing possible, and I'm going to show you, and I'm going to really highlight in here, okay? Let's just say that you had, I'm just going to round these numbers up just to make it easier. Let's assume that you had $20,000 in credit card debt. Does anybody out there know how much this is costing you per month? Credit cards, typically, one time, this is why it takes so long to pay off a credit card. Let me give you a little secret and a little tip. One time I was in underwriting for an hour. It took me forever. And I read, that's when they used to print out the booklets. And I printed out the little booklet. And you know what that booklet had in there? It was all of the guidelines of what happens to you when you have a balance. The sad thing is for people is that 70% of people have a credit card balance going into the next month. So if you had here's your credit card. Let's just put it here. This is like today, it's in June. Okay, and I know my writing's bad, I understand, but I can speak. In June, you owe $20,000 over here, right? If you have that balance going into July, and in that fine print that I saw, sitting inside the little booklet that comes out from the bank, their little disclosures, they don't print them out anymore, but they're still online. You know what happens to you? If you have a balance going into the next month, you lose your grace period. What does that mean? Zero grace period, what's called GP. Your grace period, what does that mean? It means that time when, like me, I don't have any credit card debt. When you don't have the credit card debt and you sit there and you have it going into the next month, 70% of the people have it. And what it means is that grace period that I have, I go down, I buy something at Costco or Walmart or something. I buy something on that credit card, and what happens is that I get 25 to 30 days to pay it off with no interest, no fees. That's a luxury of not having a balance. 30% of the people that are out there don't have to do that. But 70% have a balance. Once you have a balance, you know what happens to you? You lose your grace period. What does that mean? Those new purchases that you use, and those new something that you had to do, your transmission goes out. I get it. Life happens. Something happens. You need to make a copay you didn't know about, the insurance, medical. There's a multitude of reasons why you say, hey, I'm not going to use my credit card anymore, and you wind up using it. And so what happens is that what do you do with that? Then you put it on that credit card, you lost the grace period, and you get to pay. Watch this one, people. Here's the secret. You lost the opportunity to not have an interest-free loan. So that new purchase that you had gets charged interest from the day that you got it. Just remember, if you remember nothing from this video, remember that. Like, oh my gosh, no wonder it takes me so long to pay, off this credit card. It takes you 17 years making minimum credit card payments. And what do they ask you to pay? They ask you to pay on this 20%. Who's got the biggest buildings in town? Just remember that. And you'll know why. Because why? At $20,000, they're going to ask you to pay a minimum 3% payment. That's not your interest rate, but most of the interest rates now, they used to be lower. Now, you got to remember, it's like not only did interest rates and mortgages go up and the cost of money, well, look what these have done. This is ridiculous. The average credit card interest rate today is somewhere between 25 and over 30%. You miss a payment, you're late on a payment, they jack that up to whatever the maximum usury laws are. Some of you know what that's all about. That's sad. But the bottom line is I'm going to use this number at $30 a thousand. Okay? So 30 bucks per $1,000. So I'm going to do this math for you. You're making payments on this, and this at $30 a thousand. We take the 1,000 into 20,000, and we get 20 cycles. So it's 20 times 30, which is $600 a month. I know my writing is bad. So $600 a month just on the credit card alone, and you don't want to touch this house, okay? You don't want to touch this. You don't want to touch this equity. If you've got equity in this house, shame on you for having credit cards sitting at this interest rate. I don't care how you spent it. I'm not here to judge, jury, and executioner when it comes to credit card bills. I'm just trying to sit here and explain something to you of how important it is. It isn't about not spending. It's like going on a diet plan. I just lost 30 pounds. I know I still got some more to go, but I just lost 30. What's it taken in the last 2 months? A lot. I haven't been able to eat. No, we ain't going. This isn't a diet video. But I'm just sitting here trying to explain to you, it takes work to do the things that you want to do. But the $600 a month is what your current situation is sitting here at $600 to pay that $20,000. I don't care about the boat. We'll leave that off and we'll leave the RV. But I'm just going to focus in on this seminar on credit card debt. Because I could bring up a report if you want to sit here and try to tell me, because I have access to it. I'm approved with credit. And the thing is, I could pull up a report and get anybody's information and demographics. And I can tell you that I've looked at these reports enough. And I'm just telling you, the credit card bills are exactly what you hear in the media. They're actually correct on that. That's a lot of debt that's out there. But it makes no sense to me of why you would keep this credit card bill sitting in here and not be willing to at least look at and leave your first mortgage alone. And I'm going to show you a new scenario here. That was $600 a month sitting right here on $20,000 at $600 a month. And if with just that $20,000, what we could do, putting it into your house, again, not trying to get your money, not trying to get your mortgage or anything else, but we are going to focus it on this particular seminar here of a second mortgage, of a possible HELOC, and I'll show you home equity. HELOC stands for home equity line of credit, just like having a line of credit, just like a credit card, you're just going to use your house instead of it. And just remember in this scenario, you paid $200,000. Did you really do anything to get it to be worth $600,000? This is what everybody hangs on to money that they didn't create. I understand it's your house, it's your equity. It's not mine. But the point is that you have this equity sitting here, and it's not being used, not being tapped or anything. You want to give something to your kids? Well, you sure as heck don't want to give them a $20,000 credit card bill, right? That they're going to have to pay. So you might as well just at least listen to my proposal of why you should refinance today. Let's look at the scenarios. Your first mortgage already. You leave it alone. I talk to people all the time. First thing, I ain't touching my mortgage. I get it. I get it, ma'am. I understand. I'm not asking you to touch that 2.5. Smart money says keep it. So you leave your $100,000. Not even talking about this, right? We move this to a second mortgage. Okay, called a HELOC. Hope you can read this. No, writing's bad. Let's not judge my writing. Let's judge me based on the content of what I'm talking about. I'm not an artist. The second mortgage, let's just move, and we're just going to talk about this $20K. And we're going to move the $20,000 over here. I can get you a HELOC. Just about anybody can go to the bank or whatever, but we specialize in some of these things too. So if anyone's in Florida, be happy to give me a call. It's my little plug, but that's not, again, why I did the videos. I did the videos because just drives me nuts to listen to people on the media and even some real estate people call themselves professionals. They don't understand any of this stuff. And it's like they'll still send their loans to somebody else. I'm like, look, I don't understand what they're talking about. Look, I don't order take here. I structure deals and I try to structure things for people and have it make sense. And this makes sense to me. If I move your $20,000 and get you a second mortgage and I can fund this loan within, say, 15 days, okay, somewhere in there. So let's just say 15 days. So 15 days later, what happens? If you took the $20,000 and we pay off and the credit card goes away, what are my payments on this? Now I'm just, again, we're going to base it off this kind of, they're adjustable rate mortgages. So any disclosure there, they're tied to an index, usually the 12-month CMT. And it's like, again, that's some homework if you want to look at that. But I'm just trying to say, and you have a margin attached to that. But I'm going to say that my adjustable rate mortgage still blows this out of the water. And then you can get back your, what we talk about? You'll be able to use your credit card again for just emergencies or whatever that you want without having to pay any more of losing the grace period and paying interest on charges that you just charged. It's ridiculous. So $20,000. If I move it to that, it's usually typically about $6 a thousand. So your new scenario here, again, this is just illustrative purposes. Disclosure again, these are not interest rates that I'm quoting to anybody in violation of the TRID and all these other kinds of laws that are put upon me about APR. I'm just showing a diagram and an educational video on why you should refinance and what the numbers mean. I can move that loan at $20,000 and it's costing you $120 a month, even with what the media says is not the time to refinance. The interest rates are too high. Wait till they go lower. They're not going to go that much lower on these. These things go up and down. I got in the business, it was 6.5, about where it's at now. It went way down for a while, and that's what everybody got comfortable with. And the sad thing is with the interest rates, you know what it did? It drove this equity because people could afford more money. Kind of sad. So they went out and bought all this stuff, and now people are sitting around like, now what do I do? Well, if you were to do it back over here, buying another house, and I'll talk about that, another reason why you should refinance, pull equity out to go buy something else. $120 a month. It was costing you $600 before. Do the math, people. How much am I saving you? $480 a month. $480 a month. If you got a car payment, the average car payment right now, average car payment is sitting at over $800 a month. I get people all the time, well, I got my car payment, I got to pay that for the next 7 years. And how long did I say was the average loan? How long did the average 30-year fixed last? 7.2 years. What's the average car length of time? 84 months. What's 7 times 12? 84 months. So you're sitting there on a car payment paying $22 a thousand when you could have been paying $6. Do you understand? That's why I'm like passionate about this. The numbers add up to why you should refinance today. Taking the time here on a Sunday afternoon, put the tie on or whatever, just because you mean that much to me. I care about your finances. I wish everybody had no debt. I wish nobody owed anything. Really, put me out of business. You know, I don't care. Go find something else to do. I got lots of skills. But the point is, I'm just trying to say that's sad. I sit in this business. Recently, I've gotten back in, putting in a lot more effort in again. And the reason why is because I care. I hear so much misinformation out there. It drives me nuts. $120 a month. Just giving you generic. On $20,000 that you could have moved it to here, take a little bit of this equity. Did you create that equity? Did you put a new pool in? Did you remodel the house? Did you put a new roof on? No. So it drives me nuts about buying some older home. I'd rather buy something new. Why? Because in the last 30 years, that's about how long a roof lasts. Nobody's paid for a roof. All they've done is just transfer equity. Keep selling, keep selling, keep selling. This 200, selling it for 4, selling it for 5, selling it for 350. Just keeps going up. What's it going to do in the next 10 years? Let's just say it stays flat. You notice I'm not talking about your house going up in value. I don't care if it comes down. You do. But I'm just saying, smart money. If you got this is a no-brainer. Leave your 2.5% in the front. Come back over here. Let me or somebody else take care of getting rid of this debt, and then I can put you on another financial plan to make it easier. Did you understand that? Cheaper money. Move it to the house, and that's a reason why you should refinance today. I'm going to show you something else now. Here we go again. There's another reason why you should refinance today. I went back to my scenario that in your neighborhood, wherever you're at, again, I'm just going to use the local market so people don't think I'm making up some numbers and coming out of my imagination or talking about yesteryear. And I love these seminars or some of these things I've been to. Someone wants to tell me about a $100,000 house. Really? Where's that at? I know there's some in this country, but hey, look, I'm not dealing with that. I'm dealing with $500,000-$600,000 homes, right? The $1 million stuff, because that's where it just seems to be. Even if it comes down, I'm just going to sit here and just go back to my example that 20 years ago, Go ask yourself, how much was the house in your neighborhood or in your area worth? I'm going to just use the live numbers that I know my own personal self when I came here to go take a look and investigate the area. It was $175,000 for a 4-bedroom, 2-bath, brand new house. Okay? That now is sitting at let's just say 550, somewhere there. I don't know. I don't know what it's worth, but we can do the research. I know I'm not far off on these numbers. Okay? So you got lots of equity in this house. Let's assume that last stuff I was talking about, you don't have any credit card debt, but you own this home free and clear. You got the really 800 FICO or whatever. You're working at your job and you're going, geez, I need to get a side hustle. I need some extra money because it's expensive to live, right? Very expensive. Inflation's running out of control. I'd say put some money on your cash. I go back to that HELOC. You should have some. Sorry, it's a little hot in here. AC must be off. So if I'm sweating, whatever, it's not because I'm nervous. I'm sweating because I'm hot. Anyway, investment opportunities. Just ask yourself a question, and myself too. What if I had bought, with partners or whatever, you found ways, I bought 5 of those. What if you bought 5 in your neighborhood 5 years ago? They were compounding at 20% a year. They did go up. So if you had 5 of these at 275 and they went to 500 and you sold them all, you talk about 1031 tax deferred exchanges and stuff like that, but I'm not even going to go in that direction. Okay, I used to be a controller, did accounting work for 7 years. I'm not even going to go into that area. But the point is investment opportunities. If you have equity sitting in your house and sitting idle, we're sitting on $34 trillion. Baby boomers and older are sitting on $34 trillion. Do your kids need a home? Do they need some help? And that's not even talking about. It's another reason why you should refinance today. I'm not even going to put that up on the board. But if your kids can't buy a house and you love them, like I have my 2 kids, you love your kids, right? Good or bad, make mistakes, whatever, still your family. Maybe you want to help somebody out that can't even get there. What have the rents done? The greedy landlords in the last decade, what have they done? Ever since COVID too, this ripping people one way or the other. I mean, I got programs. I can get these people out of house with very little money out of their pocket, and they still stay in an apartment. I deal with people every week. They don't believe it's true. It is what it is. You know, it's sad because those that believe it, they'll become one of my clients. But the thing is that those that don't, I can't get over the media. You know, I'm not a media guy. Obviously, I'm just a finance guy, hardworking, no mortgage professional. I'm trying to help you out understand this. So, what can you do with this? See, typically when you go and you buy something here, see, right here in that scenario, if you're sitting with $400K in equity, you got to ask yourself, the average loan lasts 7 years. You're going to stay there forever? All the homes I thought I was going to be in, I was going to stay there forever. Not in none of them. Of the 15 loans I did. Not in any of those houses anymore. Condos and things I owned. It's like, you know, so they always move around. People, it's like, where's the smart money? I don't know. Maybe your kids moved to another state. I don't know. But again, one of the best ways to do this to make more money is what if you had 5? So I'll talk about all these other ones, these rich billionaires. They're doing seminars right now telling everybody they're going to buy an office building and all this other kind of stuff. I just talked to a woman last week. So they're going to buy a $10 million office building. It's never bought a house. You think anyone's going to lend money to someone that's never done that? Come on. I mean, I don't even understand that stuff. Let's get real. This is real stuff. Got equity in the house. Maybe you put a HELOC on the house. And I'm just saying your current equity. Maybe you got a new home that you want. Maybe you want to buy I can go up to 1 in residential lending. You can go 1 to 4, family. You can buy a 4-plex or something like that. Maybe this is going to cost, I don't know, $800K. You can do the rents or whatever. This is a way for you to build it. Real estate wealth in this country has been the really only way that the average person can have any kind of substantial wealth. Unless you're a doctor, attorney, or business person or whatever, it's kind of hard, right? They don't pay enough. The average incomes have not kept up with the cost of inflation. So all I'm trying to get at is that you could use your equity and you could do something like this. Typically, when you get into one of these, they want 20% down. So what's 20% of this? 160, right? If you had equity in the house and you're only going to stay there 5 or 6 years, why wouldn't you pull some of it out and maybe have 2 of these that go up? And I don't know if they go up or not, but there's other benefits here. You could file Schedule E's. And again, I'm not your tax attorney. Don't want to get sued. Telling I was rendering tax advice to somebody. I'm not your attorney. I'm not your certified financial planner. I'm going to pull all these disclosures out. It's the laws that we live in. The state of America. It's ridiculous. So that's another reason why you should refinance today. Possible investment opportunities that you want to do. What are some other ways? I'm kind of sweating right now. I think we're going to probably cap this off or whatever. But again, I thank you for your time. I think I've made a case for getting rid of high credit card balances. And if you got any questions or whatever, feel free to give us a call here at C Trust Financial. Here's the phone number on the screen, and I'm here to help you. My name is Jeff Gruller, and thank you for your time.